been a significant lessening of the amount of reliance on the US dollar, adherence to what John Exter said about the financial pyramid and the dollar being the last vestige of hope. I agree with both those ideas, but no lessening of the dollars in global trade. It continues and it will accelerate.
Please join us for our next live stream
Sunday, January 15th
at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be
Sunday, January 15th,
9 p.m. Eastern. See you then. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. David Morgan, the silver guru, joins us today. David is a widely recognized analyst in the precious metals industry and consults for hedge funds, high net worth investors, mining companies, depositories, and bullion dealers. He is the publisher of the Morgan Report, a world-class publication designed to build and secure wealth. He is the author of the Silver Manifesto and a featured speaker at investment conferences worldwide. And we're delighted to have David join us once again today. It's time to saddle up and silver up for the Silver Guru. David, welcome back to SBTV. How are you doing?
Patrick, I'm doing well. Thank you for inviting me back. It's always great to be with you.
Thank you for your time once again. Yeah, David, I want to start off with what were your thoughts on silver sentiment last year, 2022, and what are some key things that you're looking for to see silver do this year, 2023?
I'd say sentiment actually was good throughout the year, and I think that's easy to verify with the premiums that were very high the whole year. And if sentiment was bad, there wouldn't be any physical buying or very little, and the premiums would be, low. But that isn't the case. Even though the price was low, sentiment was strong, and prices were high when you factor in the premium that was paid throughout the year. Premiums have come off recently, and I'm well aware of that. So I think the awareness that's taking place currently and in the past, been decades, but primarily in the last couple of years, and I attribute most of that to shows like yours, Wall Street Silver, a lot more people in the silver space, a lot of people that kind of got disillusioned with crypto, and the fact that stocks, bonds, and real estate really aren't the place to be last year. Gold maintained, and silver actually came up about 5% year over year. So all of those things factored together, I think the sentiment was pretty positive. As far as going forward is concerned, I think the momentum will continue. And looking back, and I always have to include gold because, gold is the big daddy. The run to gold I forecast has already started. I think there, again, you can be verified by the fact that the central banks are holding a record amount of gold, the most in, I think, 55 years, is one of the articles popped up recently. And on top of that, you continue to see, particularly the BRICS states or BRICS countries, importing more and more gold. So the idea that gold is going to stronger hands continuously, and then, of course, once this kind of breaks free and starts moving into new highs in terms of the US dollar, because gold is at or near new highs in a lot of different currencies, once it makes that move in the USD, then you're going to see a momentum trade. And the momentum trade will take the gold run from a walk into a jog. And then, as I've said before, finishing the metaphor, it'll go from a jog to a trot, to a slow run, to a run, to an all-out sprint. And the all-out sprint is when we may, I'm not saying will, but we could possibly see what Mike Maloney and others have talked about, the unobtainium. In other words, will you be able to get gold at any price? Probably. Silver, not. That one's a little more doubtful because it's such a small market and it's held in such tight hands by the public, whereas gold is held by the banks primarily. Yes, the public holds a lot of gold, but if the majority is held by the public, then you've got more leverage to the buy-sell side of the equation. So, long-winded answer. I think the sentiment was good. I think it's going to be better this year, 2023.
It's pretty interesting what you just said there, because As we see industrial uses of silver continue to grow, will the miners be able to keep up with the demand this year, being that, as reported by Reuters and others, the Silver Institute has said that silver is headed for its biggest deficit in decades?
Yeah, I think it'll be another year of deficit. I do believe that for a couple of reasons. One is energy costs are so extreme in Europe, so a lot of the refineries that go through, Switzerland and other European countries are not able to get the profit margin they need. I'm not saying it's closed down. I'm not saying it's ended. I'm saying it's curtailed, and how much we don't know, but enough to make a difference. On top of that, China hasn't exported any precious metals, nor will they. Russia's pretty much in the same situation. You've got massive problems in South Africa on the mining sector and other arenas. It's very seldom even mentioned. And then you've got an inability in a contracting economy to get as many new projects forwarded as you might otherwise. What am I saying? ESG, the environment, social, and governance. And this has put up a roadblock on many up and coming uh, mines and energy sources. So I think that the contraction in the physical economy, there's going to be a more difficult time. And there's not as big a push for base metals as most people think because there's just not the capacity of excess capital to drive new stuff. In other words, you're going to see people buying less because of the inflation situation. So maybe that new car that they're used to buying every 2 years, they're going to buy it every 3 or 4 years. Maybe that washing machine that they're going to replace, they're going to get it repaired and wait a couple more years, that type of thing. So it's definitely a contraction in the economy. And when there's a contraction in the economy, the raw materials for whatever product you want in the physical reality is going to be lessened. And so that means 70% of the silver market's byproduct mining. Copper's 25%, lead, zinc 35%, and even gold mining contributes about 10 to 13% of the above ground silver supply on an annual basis due to mining activity. So if that's curtailed by 10%, you've just taken 7% off the top. So I do believe that we're going to see another deficit year in the silver market.
All right, David, with this deficit, should, let's say, silver stackers, physical silver investors, be concerned that this deficit in silver may mean that more physical will then go to industry and perhaps less physical to retail investors?
Well, in a free market, it doesn't matter because what that means is there'll be a competition for it. So people that need it, like the Elon Musks, 3M Corporation, Mitsubishi, Samsung, you name it, Apple Computer, they will pay almost any price because they will be out of business if they don't have some. On the other side of the equation is the retail and institutional investor. The retail may say, well, you know what, it's getting out of hand, it's going up too fast, I'm going to wait for a pullback, maybe that type of thing. The institutional side, they're much more savvy and they'll see the momentum play and they'll say, oh my goodness, look at these big industries are competing and they're going to start warehousing silver. We're going to get on the ride. We're going to ride it with them. Well, the institutions have deeper pockets. So you could see where retail says, I don't know, I'm not sure. And institutions actually rush into the silver market. So I think one feeds on the other. I've said this in past interviews, that there could be a feeding frenzy where all of a sudden the cat's out of the bag. Oh my goodness, industry is buying silver hand over fist. Well, then retail and institutions come in and say, okay, I'm getting on board as well. Since silver's such a tiny market, it can really accelerate things. And once you start making those new highs, people get excited and they don't want to sell because they don't know how high it's going to go. So they might add to their positions modestly, which is what I actually said way back when we went to $50 in late April or early May 2011. I said above 35, just buy what you need to. Don't buy, don't bet the farm on it. You could have bet the farm at 35 and sold out at 45 and done quite well, but most people don't think that way. They don't understand the probabilities of a parabolic move. But anyway, I digress. Back to you.
Yeah, I know what you mean. I'm one of those that hung on to Dogecoin too long. Anyway,
Well, that's why I like to teach trading part of the position. I mean, you have your fundamental stack, let's call it, that's kind of through thick and thin, and then you can move around with maybe 25% and kind of try and catch these waves that do happen. So anyway.
if you're enjoying this interview with David Morgan and I, please consider subscribing to our YouTube channel and let the algos know you'd like to see more content like this. And if you'd like to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. Okay, great point. David, the Fed will be slowing down rate increases. They still will be increases, but slowing down the rate of them. How do you think this will impact silver and gold price wise and then also demand wise?
Well, every time they do it, there'll be a knee jerk reaction, and there'll be all kinds of articles and comments and talking heads on the mainstream financial channels talking about how important interest rates are and what it's doing to the gold and silver markets. And it's all BS, but it will have an effect for a short period of time, sort of what's called a knee jerk reaction. And it won't have any fundamental effect on it longer term. The only way that interest rates can really impact the financial markets at large, with gold and silver being a subset of the financial markets, is for the interest rate to be above the actual inflation rate, which is what, 7% officially, and more like double that unofficially with shadowstats.com. So unless they're able to get to that level of say 7 or 8%, really it should have no impact longer term. Again, I will emphasize that it will be, you know, all kinds of things. It's a perception game. I mean, the financial people that are in charge want everyone to hold on to this Keynesian model that they know what they're doing. All they have to do is increase the money supply or decrease or contract the money supply, mess around with interest rates, trust your banker, everything's fine. We know what we're doing and you don't. And that's the furthest thing from the truth that exists. So the market will win out. How and what, remains when that starts to happen. And then you've got the other side, which I adhere to partially, and that's, a controlled demolition, where the powers that be know that all fiat fails, and they want to control the demolition and do it in a strategic way that enables them to come up with the solution, which is their central bank digital currency. Oh, we're so sorry the system collapsed. It had to be due to climate change. I mean, yeah, right. So climate change caused the financial markets to collapse, and now we've got a solution. It's called Trust Us, central bank digital currency. You can't trust those crypto liars out there. You've got to trust us, the authorities, and we're back in charge, and everything's going to be wonderful. So that's sort of a synopsis of where they want to go. Whether or not that actually is what takes place, I'm not so sure.
David, I recently saw a tweet of yours where you asked, is China controlling the silver market? What are you seeing where that question was put forth, where you actually asked that question or brought forth that question?
It's a question. I don't really have an answer, but I love to make people think. One of the main functions I think of someone in our space that's in the alt news or alt financial news needs to get people that are already awake to just think and think through. So in the China situation, if you go back, China used to export 100 million ounces of silver annually. Then about 15 years ago, I think it is, they started importing about that much. And China has a huge relationship with silver from the monetary side over centuries. And they were the last to go off the silver standard. And it was basically the Brits that kind of gave it to them with the opium trade, because China wasn't exporting anything. They were just taking silver in exchange for their silks and their teas and their spices and all that. So there is the ability of China to, let's say, be the swing in the silver market. And they're very quiet about silver. They're quiet about gold, as we all know, but they've been quieter about silver. When I was there in Beijing with the mining Bureau of Mines, and also some of the top bankers, they dissed the whole idea of silver as money ever again. But they also knew how important it was in industry and electricity. We had a big discussion about superconductivity that's kind of left the arena over the last decade or so. So I'm just posing a question that, you know, a highly technical society requires silver. And let's go one step further. There used to be a chart in CPM's annual silver survey that Jeff took out. I wish he had it back in. And it was a chart showing silver use per capita. So how much silver is used per person in the West. And if memory serves, I think in the US it'd be like a tenth of an ounce per person per year. Maybe that's too high. I have to do the math. But I thought, wow, when China comes on board, and if they get to that level, because it's not that anyone buys a tenth of an ounce for monetary purposes. It's in their flat screen TV, it's in their car, it's in their telephone, it's in their washing machine, their smart TV, whatever. That's where that 1/10 ounce comes from. Again, that may be too high, but you get the idea. And China's been modernized probably in many areas more than us. I mean, they have more maglev trains than anybody in the West. So that's sort of the summation of it. I mean, you can look at it from many different ways, but the one way to look at it is the more industrially, technologically dependent you are, the more silver dependent.
And sticking with China, recently the China Construction Bank, they will or they're going to become a member of the silver price process along with HSBC, JP Morgan Chase, Bank of Nova Scotia, Toronto Dominion Bank, UBS. What do you expect to see happen, or what do you think may happen, or if anything will change when they're on board with the silver price?
I am going to answer your question. I want to give a little background first. I think this is pretty imperative for, right in our face news. And there's an article written about the Ruble 3.0. And in that article, and I'm not going to read the whole thing, I just put it on my Twitter feed if you're interested in reading the article. But it talks about, things have changed with the Russian sanctions. And of course, you've got the BRICS countries, Russia, India, China, the United Emirates is there. And the Russian Federation has got, a trade surplus when you factor in what they are cash rich in energy, in oil. So it talks about what's going to happen. And it really gives a strong case for the gold, and it actually says along with silver has been one of the core of the global financial systems for millennia, an equivalent and honest measure of the value of paper money and assets. Now that the gold standard is considered anachronistic, it was canceled in its final form half a century ago. And it goes on to say, the conditions for the gold ruble 3.0 have been objectively developed. The sanction imposed against Russia have boomeranged the Western economy. The geopolitical instability provoked by them raising prices for energy carriers and other resources, inflation, and other negative factors put strong pressure on the global economy, in particular global financial markets. In the world, from risky investments in a complex financial instruments to investing in traditional assets, primarily gold. And it goes on to say what would happen if they did, and I'm reading into this slightly, went into a tie to oil or resources or the ruble with gold and what that would do. So it could be an arbitrage where you had a certain amount of oil priced in gold rather than US dollars. Goes on to say, and this is the end of the article, and you should read the whole thing. Gold mining, which today barely occupies 1% of GDP, may well grow due to the growth of both production and relative oil prices to 2 to 3% of GDP and become the basis for the rapid growth of the entire commodity sector, which is 30% of GDP, and the balancing of foreign trade, which is still based on the tyranny of the issuers of quote unquote hard currencies and the risks of devaluation and insufficient convertibility of soft currencies. In this case, Russia, due to a well organized global quote unquote gold rush, and the population of Russia following the world central banks has already increased investment in gold by 4 times compared to last year. Again, going back to my run the gold thesis. will be able to increase gold production only due to three large already commissioned deposits from 330 tons by 1.5 times to 500 tons, becoming the world's leader in this strategic industry as well. As a bonus, we will get a strong ruble, a strong budget, and implementation of an accelerated development strategy that is a strong economy. So Russia's not messing around. They're putting it out in the public domain what gold means to them and what it means to their economy and what they're doing about it. So now you ask me about silver. Well, what if, and I'm asking the question, what if China took the same kind of attitude towards silver? Wouldn't that be something? I mean, I did this lecture series a few years ago, and I titled it, What If Silver Were Treated Like Gold? And you can look it up on the internet. It's out there 2 or 3 times. I gave the same lecture 2 or 3 times. Regardless it's not about me. It's about the idea that when the bankers, the elitists, the money masters took us off the silver standard, I think they knowingly or unknowingly did it with the idea that silver was too valuable to be money. And they had to make it a base commodity like you would make lead or zinc. And by doing that and not having it as a monetary reserve, they could keep the price down. But if they had to keep a monetary reserve of silver and gold together and keep it at the monetary ratio of 15 to 1, can you imagine what the price of silver would be right now?
Yeah, I hear you. Uh, this is pretty interesting because running parallel to this, you shared an article on LinkedIn from Alessandro Blasi reporting on how each piece, let's say in the silver or solar supply chain, is dominated by China. And I bring this up because with oil, we know the petrodollar is dying. With energy, Russia is not welcoming to the US dollar. And now with new or future energy production via renewables, China is basically in charge, and one day they may not also welcome the US dollar. So, with what you just said and what that article from Alessandro Blasi said, is the US dollar sort of quantifiably now on the way out as the world reserve currency?
It is, and I forget the numbers. I just read it yesterday. Forgive me, I'm getting older, but the idea will be correct. The numbers are probably wrong, but if you go back like 2 decades, 80% of world GDP was based on exchange of the dollar. Now it's like at 60%. Again, the numbers are probably wrong, but it's been a significant lessening of the amount of reliance on the US dollar as the final, quote unquote, final means of payment. And that trend continues. So even though, there's a lot to be said about the dollar milkshake theory and my own adherence to what John Exter said about the financial pyramid and the dollar being the last vestige of hope until the whole thing goes to gold or the massive run to gold. I agree with both those ideas. But no, if the trend is very clear, Patrick. I mean, let me reemphasize it. The lessening of the US dollars use in global trade started quite some time ago. It continues and it will accelerate.
And you mentioned central banks before. Are they perhaps buying more gold as a sort of insurance against the potential US dollar, let's just say, collapse loosely, and protection against the US led sanctions?
Yes, I mean, all the bankers, not your local bank on the corner of your neighborhood, but all the big banks, central banks on BIS, IMF, World Bank, they're all well aware of gold being the money of last resort. And that's why they hold it. And so, in the worst case scenario, they could go back to gold. Not that they will. I don't think they really want to, but they have it. Like most people that own gold. I mean, most people that own gold that have a balanced portfolio keep it at a certain level, and that's all. They don't really rely on gold as being like an investment. They look at it as being a balance to their portfolio. That if everything goes to hell in a handbasket, gold is going to shine brighter than ever. And that's sort of the same attitude that most of the major banks have. So, yes, I mean, anyone that knows monetary history knows that the end is nigh. And it's been longer than some of us have thought. I mean, I corrected myself since before in other interviews. I expect to be earlier than now. Although I did change my opinion because of the data. And wait a minute, wait a minute. China's coming in. With China coming into the fore, it could push it out another 20 years because, China was basically a rural, agrarian, unindustrialized society going back 25 years. And of course, it's a booming, major cities, huge growth, people that didn't only had, when I was in Beijing, even, you know, a lot of bicycles, and there still are. But now most bicycle owners have gone up to mopeds or little motorcycles. In other words, they want a more of a Western lifestyle, and that means they're burning more energy. And that continues. I mean, advanced economies like the US have actually kind of curtailed their addiction to hydrocarbons somewhat. But other less developed countries are increasing their use. And why not? Energy is life. And, the more energy you have, the higher lifestyle you have. So it's complicated, but I think we're going to get to the end game really soon, meaning a couple years, 3 maybe at the most. That's my stance.
That end game, if you don't mind, what do you how do you define the end game? Is it the CBDCs coming in? Is it where the dollar has finally run its last course, its last leg, or what is the end game to you?
The end game is that there's enough of a major, not necessarily political, could involve politics or geopolitical, but it's primarily a financial conundrum where the powers that be, either by their control or out of their control, takes place that says this doesn't work anymore. Freezing up of the bond market, major financial institution that cannot make payments, failure of like a major pension, like what was happening in Great Britain. And, would that have taken down the system? It could have. I mean, would it? I don't know. But the authorities came in and changed things as rapidly as possible, which you can do with a digital based currency. But that's what I expect. So, some event or events that are such a huge wake up call to the financial markets that everyone can see it for what it is. The emperor has no clothes. Look, it's obvious. Everyone sees it now. And that won't be the general public. The general public will just know that, the stock market crashed, the bond market crashed. You can't get a loan. You know, Callable loans are called in. I mean, a big mess. That's kind of what I envision. As far as what is the outcome of that, again, the most likely is a savior figure, a CBDC of some type, either national, like the US Fed coin, as an example. And China's already on it. Or it could be a merge between something that's already in the banking system and pretty much utilized for final settlement at a rapid rate, like XRP, and maybe a nation state or two or 10 decide to use that as the rails for the new SWIFT system. And all they do is digitize everything and outlaw cash. So there's a lot of scenarios off in my head, and others that have written about it that, have looked at it even deeper than I have. But I think that that's the catch point. If you take the economy down, either deliberately or indeliberately, and now it's quote unquote failed, and you have a solution, how easily will people transition to that solution? And the answer remains to be determined. Um, Not pretty times, but very interesting times.
Yeah. David, in one of your recent posts on the Morgan Report, you spoke on how we can actually gain financial freedom during this great reset. You've always been a man of the people. Can you tell us what do we need to do to gain financial freedom in this upcoming great reset?
Well, it goes back to one of the best mentors I ever had, the late great Harry Brown. He wrote a book, How I Found Freedom in an Unfree World. It was, I don't know what, 40 years ago. And on that basis, that you can be your own bank. I mean, we hear that in our community. You don't hear it in the general public. But the basis of money has been throughout history silver and gold. And yes, there's clamshells and all this other stuff. But if you look at the truth, it's primarily precious metals. And that's what's worked for thousands of years. So if you go back and put yourself on that standard, maybe not totally, I'm not advocating get rid of all your fiat and move it into gold and silver, although some people have, but you don't need to do that. You need a portion of it in there. And if that's the case, then you will have financial freedom. Now, the only way that could be incorrect, and it could be, is that there's some kind of mandate that says, well, you cannot, trade in gold and silver. But that's pretty hard to say when, the mints are minting it, the banks own it, silver's required for everyday life. It's pretty hard. I mean, there are people that say it'll be confiscated or it won't be allowed. And I hear their arguments, but their arguments don't hold water with me. I don't think that's the case. I think that you can put yourself in a position where you have your own backup plan, regardless of whatever the authorities are going to throw at you, and that's financial freedom.
All right, David, you gave us a lot to think on here. Before we wrap up, can you tell us how we can all follow more of you and your work?
Yeah, Patrick, and thank you. TheMorganReport.com, get on our free email list. I just started an Instagram channel, and I think it's called at Real Silver Guru. I like people to come over there. I'm doing some small clips on kind of the Instagram style, you might say. Twitter is the main public source. I tweet myself and a couple guys that I totally trust have access to the account. So not everything that's up there is posted by me. I don't post everything I agree with. In fact, sometimes I post stuff I don't agree with. When it's stuff I don't agree with, I usually put for the record and then I post it, because for the record means I could come back and say later that, XYZ Bank said that gold's a pet rock. And, I posted it on my Twitter account. And then 10 years later, I could come back in 5 or 2 and say, pet rock, that's funny. How come your bank just bought all this gold or whatever? So, but it's fun. It seems to be one of the most prevalent ways for today's society to communicate with each other is probably Twitter, especially since Elon bought it and it's kind of loosened up. And I also tweeted a few things about Elon that are pretty interesting and most people are not aware of. I'll just go another minute here, Patrick. But we're moving toward a technocracy. Most people think we're moving toward a communist system. Really, it's a technocracy. And the point of fact that I put on my Twitter account is that Elon's grandfather was the prime mover and shaker in technocracy in the 30s in Canada. So I think he's a technocrat. I have nothing against him, really, but you want to be aware of making any man, woman your idol or your savior. Anything in the human realm has got human vulnerability. So that's why from the spiritual side, certainly there'll be good leaders and bad and all that type of thing. But for a real foundation, you want to go to something higher than that, outside of the human realm. And that's why I'm such an advocate. One of the reasons I'm such an advocate of gold and silver, because as far as I'm concerned, it's honest, lawful, God's money. And I think that with that perspective, you get a better feel for why it worked 5,000 years ago and why it's going to work today.
Amen to that. Completely agree, 100%. And I did see that tweet about his grandfather, I think it was, or
It was his grandfather, not his father. Yeah.
David Morgan. We thank you for your time and really the insights you've given us, the calm, logical reasoning behind things, and I'm pretty sure we will all take that as we try to dig in for more information and truth ahead. So I appreciate that, and I appreciate the time you've given.
Well, Patrick, it's always great to be with you. And remember the first time you reached out to me, you're a smart guy and a kind man, and I appreciate you. So happy New Year to all of your followers, our followers, and look forward to our next interview. Thank you.
Thank you, David. Likewise, you are really one of the guys that got me to finally wake up to silver. So I appreciate you for that, and hope we can do this again soon. Happy New Year to you as well. That was David Morgan, the Silver Guru, sharing his views on silver. To follow more of David's work, please visit themorganreport.com. If you like this video, please do subscribe, share, and give us a thumbs up. We greatly appreciate it. Audio-only versions of this interview can be found on iTunes and Spotify.